This is Money Talk on News Talk 580 CFRA. Here is John Budden.
Good afternoon, folks, and welcome to Money Talk. Here's the lineup for today's show. We start with Dave Sally of the Ottawa Business Journal. Then we go to Anthony Dunn in Calgary, who is the head trader at CFRA, and he's going to give us his perspective on the Canadian dollar. After the break, my weekly chat with Matt Hendricks, Senior Vice President, National Sales at Sprott Asset Management, and on to an interview with Mark Faber, who is editor and publisher of the Gloom, Boom, and Doom report. And he discusses why global markets have been rallying and gives his outlook for global economic growth. After the news, an interview with Peter Grosskopf, who's the CEO of Sprott Inc., and then to Amber Kanwar and John Ehrlichman of our affiliate BNN, who will be discussing Valiant Pharmaceuticals, who are under investigation by U.S. federal prosecutors. And to conclude the show, an interview with Ian McPherson, Executive Director with the PEI Fishermen's Association, and he tells us about the lobster business. But first, we go to Dave Sally at the Ottawa Business Journal. Well, it's that time again for our update with Dave Sally of the Ottawa Business Journal. How are you this weekend, Dave?
I'm great, John. How are you?
Okay, and trying to remain cool and hope that you're enjoying your weekend.
Well, thank you. You too.
Now, Dave, one of the most anticipated retail projects in decades was unveiled this past week at the Rideau Centre, while the region's largest medical marijuana producer announced new funding, and Algonquin College decided to pull the plug on its Saudi Arabian venture.
That's right, John. Well, let's start with the moment many Ottawa shoppers have been anxiously waiting for, and it happened this week when the Rideau Centre raised the curtain on its 3-year, $360 million expansion project on Thursday morning. Some shoppers were out there very early in the morning to line up to get their first look at stores new to the mall, such as H&M. So the new 4-story extension on the mall's east side is actually anchored by Quebec-based retailer Simons, which I know many local shoppers are familiar with. The family-owned company is one of the country's oldest surviving retailers, and it chose the Rideau Centre as the home for its first location in Ottawa. Simons CEO Peter Simons says he's thrilled to be a part of the new expansion and hopes Ottawa shoppers will come to appreciate the store as much as the chain's many loyal fans in Quebec. In total, there are 28 retail outlets in the new wing, which takes up about 230,000 square feet, and 21 of them are new to the mall. Several of those are also making their debut in the Ottawa market, such as clothing outlets Anthropologie and Massimo Dutti. Of course, the new expansion also has its share of local content, including the mall's first Bridgehead coffee outlet. The wing features amenities such as quartz flooring and enhanced lighting. And, of course, it is equipped with the latest technology, including free Wi-Fi and a text message-based concierge service. The Rideau Centre is the most visited mall in the region. It gets about 19.5 million people a year passing through its doors. And mall owner Cadillac Fairview says the new retail additions are designed to give today's tech-savvy consumers a more international shopping experience.
Now, meanwhile, it was a big week for a local medical marijuana company that landed some major new funding.
Yeah, that's right, John. Smith Falls-based Canopy Growth Corporation announced it has agreed to a bought deal offering worth more than $30 million. The deal would see several underwriters, including GMP Securities and Dundee Securities, buy more than 8 million shares in the company. That news came just a few days after the company announced it had secured another $5.5 million in financing from a commercial lender. Canopy CEO Bruce Linton said the announcement suggests that, quote, more sophisticated pools of capital, unquote, are getting interested in the medical marijuana field. Canopy, of course, used to be known as Tweed, and it just recently, in fact, began trading on the Toronto Stock Exchange. In 2014, it became the first publicly traded medical marijuana producer in Canada when it launched on the TSX Venture Exchange.
And finally, Algonquin College also made news this past week with a major announcement.
Yeah, the Ottawa Community College said Thursday it was pulling out of Saudi Arabia 3 years after launching a for-profit men-only campus in Jazan on the country's southwestern coast. The project was originally supposed to run for 5 years. It was a partnership with a Saudi government agency. But Algonquin College President Cheryl Jensen said the two parties were unable to come to an agreement that would satisfy the college's financial objectives. When the project was first announced, Algonquin said it expected the project to generate more than $4 million in profits, but financial statements show the Saudi Arabian campus had a net loss of $1.4 million during the fiscal year that ended March 31st, after losing a similar amount in the previous fiscal year. And transferring the campus's operations from Algonquin to the Saudi government Center of Excellence program will cost about $4.3 million, and the college says that will be paid for out of reserve funds. Algonquin officials stressed the college's international operations are not funded by the province and said revenues from other operations will offset any losses from the Jazan campus. Algonquin continues to operate for-profit foreign campuses in China, India, Montenegro, and Kuwait.
And Dave, what is on the OBJ radar for the coming week?
Well, John, Mayor Jim Watson himself will be at the headquarters of one of Ottawa's hottest software companies on Monday afternoon to talk about the growth of the city's high-tech sector. The mayor will be touring Phoenix's office on Cooper Street, along with members of the city's economic development team and representatives from Invest Ottawa. They'll find out how the company helps global service providers operate their networks. And I'll be there as well, and I'll have a full report on obj.ca.
Well, thanks so much for joining us. Have a good week, and keep cool, and we'll talk same time next Sunday, 2 p.m.
Sounds good, John. You too.
Now to Anthony Dunn, who is head trader at CFRA in Calgary, for his thoughts on the Canadian dollar.
Your Canadian dollar, 77 cents plus against the greenback, and it's been in this range since late June. We had oil drop more than 5% over that time. And our next guest says the Canadian dollar's resilience is unwarranted. We're off to Calgary for more on this from the head trader at CFRA's currency service provider, Anthony Dunn. Anthony, good to have you with us.
Great to be here, Michael.
All right, if 77 cents is overvalued, what's a reasonable valuation for the loonie based upon everything that we're dealing with?
I would say somewhere closer to at least 75 cents would be a little more realistic, maybe closer to 73 cents. If we're looking at the loonie as a petrodollar, and on June 28th, crude was trading at $50 a barrel, and on August 3rd, we were down to $40 a barrel, actually sub 40, and the loonie was still around 77 cents. So to me, that signals the loonie is overvalued at these levels.
We have seen a disconnect between the value of the Canadian dollar and that petro, as you point out. Why?
I think it's more of a U.S. Fed story. I think at this point right now, markets are pricing in, a 6% chance of a rate hike in September, maybe a 4% in October and November. Maybe we jump to an 8% chance in December. And I think that's a drastic change from the 4 rate hikes that were being priced in at the start of the year.
So you're seeing strength in the U.S. dollar as the cheap money ride continues, pressure on the U.S. dollar because we're not expecting to have to see rates rise anytime soon.
That's correct.
Okay, so with that in mind, what about the Canadian side of that equation? Sure, things have been slow growth here for a while, but isn't now about the time we're starting to see the net benefit of a subpar Canadian dollar?
We should be, but we're still running a massive trade deficit. So that tells me that not only is the weak loonie not helping exporters, but, this country imports a heck of a lot of stuff as well. So certainly, the Bank of Canada, everyone was telling us that we were going to see benefits from that, but we haven't. We lost 111,000 full-time jobs in the last 2 months and have had negative GDP 2 of the last 3 months as well. So to me, that doesn't signal a strengthening economy.
We were looking at this new Mura report earlier this week that said there was an increasing chance that the Bank of Canada would actually cut interest rates. First of all, do you see that as a possibility? And if that happened, wouldn't that actually put even more downward pressure on the Canadian dollar?
Oh, it absolutely would, without a doubt. Sure, it's a possibility. I don't think they will do it. As your previous guest mentioned, we've shifted in Canada from a monetary stimulus policy to a fiscal stimulus policy, and that will, supposedly start to take place here in the second half of the year. So I do believe Polos and the BOC will hang to the sidelines to see if that can spur the economy. But it is a possibility. Carney and the Bank of England just went to a quarter point, so why can't we?
So if you see the Canadian dollar overvalued by as many as 5 cents against the greenback, is there a catalyst that pulls us down to that 73 to 75 cent level, or are we just going to keep seeing that disparity between oil and the Canadian dollar, that disconnect, continue?
In my opinion, our opinion will be range-bound, similar range to what we've seen since April, really, which is anywhere from 75 cents to 78 cents, or in trading terms, a 128 to a 133 handle. Certainly the catalyst would be potential Bank of Canada cutting rates, or at least the market pricing it in. And then, of course, down south with the Fed, if the market begins to price in a higher probability of the Fed raising rates, you'll see the U.S. dollar get a boost from that as well. But I think it's a central bank story on both sides of the border.
Anthony, we appreciate your time. Thank you very much for joining us.
Stay with us, folks. Coming up after the break, my weekly chat with Matt Hendricks and Michael Hainsworth of our affiliate BNN's interview with Peter Grosskopf, who is the CEO of Sprott Inc. You are listening to 580 CFRA.
You're listening to Money Talk on News Talk 580 CFRA.
Well, I'm pleased to be joined by Matt Hendricks, Senior Vice President, National Sales at Sprott Asset Management, for our weekly chat. Welcome, Matt.
Thank you, John. How are you doing today?
Oh, I'm staying dry, and it's been a soggy weekend.
Yeah, we're up at the cottage, and we're trying to fish in the rain and not having much luck, but it's still nice to be doing it.
It's been a week of extremes in the U.S. stock markets, which pushed to new all-time highs as investors chased yield. Meanwhile, in the bond markets, yields reached new lows and were negative in a number of countries around the world. If one is investing in stocks, it's vital to have an active portfolio manager who understands value. In the case of fixed income investing, yield can be achieved by investing with managers who use non-traditional strategies. Now, could you tell us about the special nature of some of the Sprott equity and fixed income strategies that should be complemented by energy and precious metals holdings, and what makes them exceptional?
For sure, John. Yes, this is definitely, with markets at all-time highs now, it's the most unloved rally around. Volumes are not that good, but people are starving for yield, and so they're just clamoring to these dividend stocks, pushing their valuations to all-time highs, which could be dangerous because if there's a serious pullback in the equities markets, that could cause your portfolio to go down. And traditional bond funds are getting clobbered because their duration is 7 and 8 years for less than 1%. So we have alternative income strategies which are fantastic, starting with Scott Colborn's diversified bond fund, where he can go long, he can go short, he's unconstrained, he can go anywhere he wants in the globe, high-yield governments. He's having a very good year. He's still in corporate class, so distributions are tax-deferred. And Mark Wisniewski, who manages our Credit Opportunities Fund, he's doing a fantastic job. He buys quality credit and then layers that by going long AAAs and short governments to take away interest rate risk. And he's been getting his clients for the last 7-8 years now 6 to 7% with almost no downside volatility. So he's doing a great job. So we have some serious yield-producing products here at Sprott, which our listeners should definitely look into.
Well, tell us a bit about some of the special credit products.
Well, we have a product called Private Credit, which invests in asset-based lending. We've got a product called Bridging Finance. We buy receivables at a discount and hold them to maturity. Just different ideas out there, unique products in Canada, which these things are doing very, very well. And we're getting very good inflows into these strategies, and we're really adding to our clients' portfolios, especially on the fixed income side, because a lot of people are very scared about the equities markets right now.
And then your investors have benefited from energy and precious metals around the perimeter of a core portfolio.
Well, absolutely, John. We always talk, you and I, that you have to have a diversified portfolio, dividend stocks, quality fixed income, downside protection, and then the sleeve of energy, the sleeve of precious metals, and these alternatives. We just added up a portfolio with these Sprott products. I mean, the volatility is very low and the returns have been exceptional.
Now, I'm going to be playing an interview with Mark Faber, who's known as Dr. Doom, but he's surprisingly balanced in his approach today. I mean, he's obviously concerned about valuations around the world, but he is saying that one has to have a diversified portfolio, and then, of course, he does speak to gold.
Well, listen, he's not the only one saying overweight gold. Even the TD Bank 2 weeks ago, their chief investment officer put out a note saying that he's going overweight in gold. And for a bank CIO to say that, that certainly tells you that they are worried about where these equity markets are going. And, you know, for a lot of people out there coming from a bank CIO, it gives them a lot of comfort rather than just hearing the Sprott guys say, you know, buy gold. So we're certainly seeing how gold has leveled out a portfolio by owning bullion, but adding definite alpha to the tune of 122% on the gold side and 170% on the silver side this year on the equities. And that is really helping drive nice yields for our clients' portfolios.
Well, for our listeners, I wonder if you could give us your coordinates. And, of course, that includes advisors as well.
Of course, John. I'm always happy to talk to anybody who calls in, and we've had a nice number of calls in the last few quarters. I'm always reachable toll-free at 866-299-9906, and always remember to visit Sprott.com.
Okay, Matt, that's it, and we'll talk again next Sunday, 2 p.m., and try and catch a fish.
Okay, John, thank you very much.
And now to the renowned global strategist, Dr. Mark Faber from Chiang Mai in Thailand.
Let's take a look at global markets, and who better than Mark Faber, editor and publisher of the Gloom, Boom and Doom Report. He joins us from Chiang Mai, Thailand. Mark, always great to see you. Thanks very much for coming on the show.
Thank you.
Give us your take on the world right now. How insane is the situation with negative interest rates spreading, it seems, relentlessly?
Well, I think that the policies of introducing negative interest rates are going to backfire in the long run. But even in the short run, if the idea was that people would spend more and invest more based on negative interest rates, the theory is wrong in the sense that if I was earning, say, 5-6% on my money previously, and now I have no income on that money, it doesn't give me much confidence to spend more. My reaction will be actually to spend less and to save more to offset the loss of income. So these policies are very questionable, and they distort, obviously, all asset markets.
Mark, it's Barry Schwartz. We're seeing negative interest rates, of course, but we're also seeing some better numbers out of the U.S. We're seeing a little bit evidence of some wage growth. We're seeing good employment numbers. We're seeing record stock markets in the U.S. We're seeing pretty good profits. Is there a potential that the U.S. may start raising interest rates faster than people expect? And what will that do to the negative interest rate scenario?
I think we have to analyze figures very carefully. Employment has improved, but mostly in low-paying jobs and part-time jobs, and in manufacturing and in the capital goods industries, jobs are hardly increasing. So that is not a very meaningful statistic, and that statistic may also have been kind of doctored by the Bureau of Labor Statistics, which is now under Mr. Obama directly. Then if we look at industrial production and durable goods orders and production, it's also very weak. If you look at retail sales, as you've seen today, they're not particularly strong. So overall, some people think that the U.S. economy will improve, but this is not my impression. And in fact, if you look at the behavior of interest rates, which are still extremely low worldwide, it would not suggest that the global economy is actually expanding much. So my view would rather be, we are 7 years into an economic expansion in the U.S., which began in June 2009. We're more than 7 years into bull market, and I believe that the recession is ahead of us.
ahead of us. Obviously, stock markets around the world have been rallying, U.S. markets at record highs. It sounds like a shaky reason to buy equities. Well, there's nothing else.
Well, that is the issue. There are other things. I always advocate a diversified portfolio consisting of equities, bonds, cash, real estate, and precious metals. But stocks, by and large, in the U.S., relative to all the other stock markets in the world, are very expensive. The only asset class that I can say is depressed are precious metals, and precious metals shares, although they've rallied strongly, but they rallied strongly from a very low level. So this is the one sector I would essentially advise my clients to invest in at the present time.
Run that past us again, Mark. So international stocks, you think they're the decent ones?
Well, in Asia, the valuations are not cheap. They're not at a depressed level. On a price-to-book basis, they're relatively low because the asset values are maybe overvalued in terms of asset values being tied to real estate. Mm-hmm. The real estate markets are relatively high. But, say, equities are reasonably priced in Asia, in Thailand, in the Philippines, Indonesia, India, and especially Vietnam, also in some sectors in Hong Kong, China. And what is inexpensive, as I said, is what you're sitting on in Canada, resource stocks, gold, silver mines.
Mark,
You're sitting on a gold mine.
Okay, Mark, we're so tight on time. I just want to ask you one thing. We hear more and more concerns about the Canadian housing market. We've got housing bubbles probably all around the world. Are you worried about our home prices in this country?
I am worried about everything. All assets are grossly inflated. And when people tell me that stocks are cheaper than in 2007 at the peak, or 2000 at the peak of the Nasdaq bubble, I tell them that may be true in some cases, like the gold and silver mining stock. But we also now have a housing bubble everywhere. We have a bond bubble, which is much bigger than ever existed in human history. This is going to be backfiring very badly. And I hope that all the central bankers that destroy the value of money and hurt individual savers who have accumulated savings and put it in bank and they get no interest today, that all these central bankers will go to jail one day.
Oh, my goodness. Oh, my. Mark, let me update you on that. They're going to retire on nice public service pensions. Mark, thank you very much indeed for joining us.
It's my pleasure.
Mark Faber joins us from Thailand, editor and publisher, the Gloom, Boom and Doom Report.
Okay, folks, after the news, we go to our affiliate BNN and Michael Hainsworth, who interviews Peter Grosskopf, who is the CEO of Sprott Inc. Stay with us. This is 580 CFRA.
Now back to Money Talk on News Talk 580 CFRA.
Sprott shares wearing yesterday's underwear. They're unchanged today. Mixed second quarter earnings from the asset manager as net sales positive but lower than expected, particularly in mutual funds. Meantime, the total value of the funds grew more than expected, $9.8 billion. More than three-quarters of the operating earnings are driven by the precious metals rally. For perspective on this and more, CEO Peter Grosskopf joins us in studio now. Good to have you with us again.
Thank you, Michael.
The bet is paying off for you now on the gold side of things after years of holding on to that. Mm-hmm. Where does it go from here?
I think we're at the start of something big. What we've noticed on the front lines is that institutions, endowments, larger investors are starting to come to gold again as a diversifier, as a hedge against what's going on in the world.
I sense a little smirk in your face there when you said what's going on in the world. To you, what is going on in the world that's driving gold higher?
7 years of central bank policies that don't seem to work on the economy. So how much longer are we going to debate whether there's a 25 basis point rate hike? What does it matter? I think gold is the counter asset for people that doubt that it's working.
We're looking here at the precious metals run over the last year, and silver's actually outperformed. We know that there is an underlying economic component to the silver side of things. What's your view on silver?
Silver does traditionally outperform when gold's moving. It's a smaller market. When investors start to crowd into it, they can unleash a real bull market, and that's what's happening in silver now.
Okay, so with gold and silver, play my mugs game.
Okay.
Give me a target price for this time next year.
Wow. That's a tough one for us. Higher for sure. I just think it's going to be a slow and gradual increase. It affects the miners more than it does the gold price itself. But I'm going to not hesitate to say over 1,700.
For gold. And with that in mind, and the issues around the world's slowing growth and the fact that you can't throw more money at the problem at the central bank level, what about at the fiscal policy level? Do you expect that we'll see government step up, open the coffers, and that slows the growth rate of gold as we see the economy start to improve?
No, I do think that you've heard the rhetoric now that fiscal spending will be increased, and that is the next logical step. But I think as deficits widen because of that, gold will just become more attractive. I think it's actually probably the last resort then.
Interesting stuff. So tell me about the mutual fund business. It appears to have experienced a dip in net sales momentum. You've seen some pretty positive quarterly net sales for 2 years prior to this. How competitive are your rates?
Yeah, fees are commonly discussed as being one of the impediments to mutual funds growing. We don't see that. Our funds are more alternatives. They're less benchmark funds, a little bit less price sensitive. But there's no question it's a tough business. We're not taking the view that we're going to build that business in 1 quarter or even 1 year. Our business is growing nicely, and we expect it to continue to going forward.
So with that in mind, what about the prospect of being bought? You know, we've heard that CI was kicking the tires on you guys about 3 months ago.
Really?
Nothing. Really? This is news to you.
It is news to me.
Are you up for sale?
No, we're not up for sale. We think we're at the start of something very good here. And look, we would look at partnerships on the distribution side. No question that distribution is an angle that every independent fund company must deal with, but we're not for sale.
So if the phone rang and there was a certain dollar value, you wouldn't hit the sell button?
Well, look, as a CEO, I represent the shareholders. I'd have to review every beneficial offer according to my duties. So
right. Fiduciary duty.
Exactly.
To at least look at
Of course.
Your business generally, not yours explicitly, but the industry in which you find yourself in has been going through some consolidation as of late. Where does it go from here? Are we done with that?
I think consolidation makes sense. It drives lower costs, and it allows fund companies to build size and scale, get better economics out of their businesses. So especially for the mid-tier companies, I think you're going to continue to see it. The problem in the past has been high valuations. That's been corrected now by the market. So I do think it'll be a more meaningful M&A scene in our business going forward.
Well, then what about you opening your wallet?
Right. Well, we do have a large balance sheet, and we do have a platform that's been fully costed with our current fund lineup. So adding more funds, if they were profitable, is always an option, and we're always looking.
Would you be doing that growth through acquisition, or would you just be introducing new products yourself?
Well, I think we have a pretty good lineup now, and we've expensed that and spent a lot of money on the development of our own fund lineup. I don't think we're going to be launching a lot more. We're going to be adding a couple of more private credit funds later this year, and that's probably good enough for us to achieve our objectives. But you always look at outside strategies, and you say if it can meaningfully and in a consistent way with our strategy build economics, we would look at them.
Is there any one area within your roster where you say we could use greater bench strength?
We have more demand than supply right now, meaning investor demand on the private credit side. Private credit strategies are high value added in this low rate environment. That is a particular area of interest for us.
Interesting stuff. Peter, we appreciate your time. It's always good to have you with us.
Thank you.
Peter Grosskopf is the CEO of Sprott.
We'll go to a break, folks, and when we come back, Amber Kanwar and John Ehrlichman of our affiliate BNN will discuss the challenges facing Valiant Pharmaceuticals. You are listening to 580 CFRA.
You're listening to Money Talk on News Talk 580 CFRA.
Let's just remind ourselves the kind of scrutiny that Valiant is under. The Wall Street Journal is talking about an investigation by the Southern District of New York, but they are by no means the only outfit that is investigating Valiant. You also have Massachusetts, the Department of Justice of North Carolina, the SEC, and two committees within the U.S., the U.S. Senate and the U.S. House. With that in mind, how much has Valiant set aside for potential settlements? Well, Joseph Papa telling me when I was on the phone with him, absolutely nothing. To date, Valiant has not set aside any funds for potential settlements. And when I asked why that was, after kind of talking through it a little bit, basically, the conclusion is that it will be several years off based on what Papa has seen as normal precedents in the area. So in this environment, despite the fact that there are several of these agencies that are investigating the company and there could potentially either be fines or settlements, Valiant has not set aside any funds, and perhaps prudently because they have something else competing for their dollars, and that is debt repayment. To date, they've repaid, year to date, I should say, they've repaid about $1.3 billion in debt. They want to get that up to 1.7 later this year. And I asked about their ability to pay, servicing the debt, sure, if you do have fines. And again, the timeline was brought up. So it seems like the thinking at Valiant is, even if some of these decisions go against us, they're not going to go against us in the near term, or we won't have a conclusion in the near term. It will be, to use his words, several years off. So that was one of the takeaways. I also asked him about his relationship with Bill Ackman. We know that Valiant's former CEO, Michael Pearson, and Bill Ackman had a very strong relationship. There were instances in which Bill would actually go to employee rallies to talk about morale since the short seller report. And Joseph Papa was very clear to say that Bill is just one of 12 board members. He actually said, I want to make that clear. All the board members are helping me, including Bill. His key contribution has been for insight into the investment community, as one would expect. But that's something investors do need to think about, especially in light of the fact that just sold the chunk in CP Rail. That's a taxable gain. Does he need a loss to offset that? Obviously, Bill appears to be very committed to the company through a board seat and being the largest shareholder. But all Papa could offer up is that he has been very helpful throughout this process, but was very cautious to isolate him as kind of above other board members.
And I get the sense from what you're saying, along with not putting aside money yet for the legal issues, that he's not willing to make some kind of assumption on what the price tag tied to that is, because we immediately saw Wall Street analysts who saw this and did that very thing.
What did you?
There was one I saw this morning of about a billion or so.
Yeah, so that was even less than what I asked him about. I asked him about $500 million. I said, say it's $500 million, and he would not even entertain that kind of possibility. So I asked, do you have legal counsel on this? Have they told you the worst case scenario? He said, obviously, I have counselors and all that, but very weak on particulars, and that seems to be what investors are having a difficulty handicapping right now. What are those particulars? That's a number investors want. What's the maximum penalty? And can Valiant afford that maximum penalty? As of right now, they have no provisions set aside for that. Now, because the debt repayment does seem to be front and center, I asked about those asset sales. And one of the interesting things he told me as they explore non-core asset sales, that's not just about business lines, so different product categories. A non-core sale could also be a regional non-core sale. So, for example, Latin America, somebody wanted to come out and buy that division of the business. Now, he wouldn't tell me whether Latin America specifically, I just threw it out as an example, was an area. But what he did say is, in addition to receiving expressions of interest on product portfolio, he has received expressions of interest in regional areas. So people that have wanted to buy country exposure, not just a product portfolio. So that's kind of, an update on how they're thinking about these non-core sales, which they said could be $8 billion worth of non-core sales.
Well, that's very helpful information, because obviously we were talking earlier in the show about the fact that if there was a perception that Valiant was in a position where they needed to sell, I mean, obviously it's a no-brainer that they would be isolating certain assets for sale, but if the marketplace felt like they truly needed to sell, would they get the kind of prices they expect that they should be getting for those assets? But your comment about the geographic breakdown, here is a guy who does know the drug market very well and probably would be in a good negotiating position to know just how the various products are selling in these different areas around the world and what he'd be willing to part with.
It's interesting you bring that up. Their estimate is 11 times, and I've spoken to 2 analysts, and that's pretty reasonable in this market. But asset sales is actually how Joe Papa came to be in the CEO role at Valiant. When he heard that Valiant would likely be selling some product portfolios, he reached out to the former chairman of Valiant and said, if Valiant's thinking about selling some of these product categories that I'd be interested in, he didn't tell me what those would be, but I would be interested in that. So could you pass that message along? And that former chairman actually said, okay, yeah, I'll do that. Also, do you want a job? And that's kind of how he kind of yada-yada'd over the rest.
Right,
he said, short story, long story short, now I'm the CEO. But that's how it came to be. It was actually Joe Papa who picked up the phone and had interest in some of Valiant's assets. Because I asked if Bill Ackman had a role. He said it was actually my outbound call that started off this whole thing.
This may not have come up in your interview. I'm just asking you.
Well, I only had 5 to 10 minutes, and I had somebody saying, okay, time's up.
But you know the case file, and we just got through the earnings for Valiant, and obviously they're bringing in a whole host of new management, including a new CEO, and the issues we are talking about are from, in many ways, the previous regime. How complicated does this become, especially when we're talking about the legal issues, the current players versus the previous players, and what role everybody has in this?
I mean, I'm no lawyer, but I imagine just because you have a new CEO doesn't, absolve the company of any past dealings. I don't think, you could point to the fact that, well, it was a certain actor that got the company into this position, and certainly Valiant has actually suggested it was the former CFO, Howard Schiller. Valiant is still subject to these investigations despite that. So I don't think new management, new board, Joe Papa pointing out 10 of the 12 board members are new over the past year, including Bill Ackman, absolves them of any of that.
And to conclude today's show, we go to Ian McPherson, Executive Director with the PEI Fishermen's Association.
Prince Edward Island fishermen are rejoicing. Lobster prices have been climbing. Our guest says this is an exciting time for the fishery, and he anticipates prices will continue to remain high as they enter the fall season. We're joined now by Ian McPherson, Executive Director at the PEI Fishermen's Association. He's in Charlottetown. Ian, thanks so much for coming on the show.
Thanks very much, Andrew, for having me.
So the reports we've been seeing, lobster fishermen have been getting perhaps $8 a pound this year. Last year, they were lucky to get $6 a pound.
Yes, and not too many years before that, it was we were looking at $3. So
wow.
It's been quite a significant increase. We're glad to see it, and it's got a lot of positive effects, to be sure.
What are the 3 main things that have pushed lobster prices higher?
Well, I would say, certainly a lot of our product goes to the United States, and the U.S. economy has rebounded the last few years. Now that coupled with the exchange rate helps. Secondly, there's been a lot of marketing and focus on the Asian countries to educate them on our lobster and the benefits of it. And thirdly, too, there's been a lot of efforts in terms of getting our certification in place as a sustainable fishery, and that's got a lot of cachet, particularly in Europe. And I think those types of things have really helped increase the price.
So lobster, it's gaining traction in Asia, as is fancy coffee, a great new market for foods. What have you been doing in Asia to raise the status of this product?
Good point. I think one of the things we're certainly seeing is this emerging upper middle class, which is new to some of these locales, and be it Asia or India's got a huge emerging middle class, and these people have disposable income, and they want to partake in things that perhaps in the past they haven't been able to afford. So we're glad to be part of that market.
Now, obviously, there's plenty of processed lobster produced in Canada, but the Asian market wants it live, wants the crustaceans live. Does that create logistic problems? Is it hard to get them over there still alive?
Well, certainly the live is some of the other jurisdictions participate in that a little more. There certainly is logistical challenges, and we produce primarily processed lobster on Prince Edward Island, and so what we've done is really focused in those markets to educate people that it's a great product, and there's zero mortality, and that they can use it when they need it, and good control on their food costs, and lots of positives. So there's been some new products come out the last few years which have really stepped up the value of processed product.
When you say zero mortality, what do you mean?
Well, anything live, and certainly shipping those distances, and I mean there are some very good systems in place to make sure that the lobsters arrive in pristine conditions, but there can be a percentage of mortality and with live shipping, and sometimes all it takes is something to sit on the tarmac when it's not supposed to, or get stuck in a delivery terminal, and you could have some problems. But at the end of the day, we're dealing in a high quality processed product that's frozen, and so that gives us a lot more flexibility in terms of shipping those types of products.
Yeah, often frozen product is great because it's frozen at just the right moment when it's at its very best, its very freshest. Tell us, are you yourself a lobster fisherman? Because I know they can be long days, 14-hour days during the season.
No, I'm not, but Andrew, but I have tremendous respect. I wouldn't have taken this job if I didn't totally respect what our members do, and it's a tough profession. But one exciting thing is on PEI in the last 5 years, we've seen 150 new people enter the industry, both men and women, and so obviously there's people feeling that it's a great career and looking forward to fishing for many more years.
And yeah, tell us, so I know the potato, very important to the PEI economy. Does it dovetail nicely? Is the busy season in lobsters different from the busy season in spuds?
Yes. We have 2 seasons here. Our spring season just ended, which was May, June, and then on Tuesday our fall season started, and that'll go to early October. It's a smaller fishery. We have about 1,000 boats in our spring fishery and 250 in our fall, but which coincides a lot. So it's sometimes tough to get people to work on the boats, and it has been a challenge, but we've been addressing that as an association also.
Now, you mentioned sustainability. Is there any danger that the lobsters could run short? It could get overfished?
We certainly hope not, and I think people have learned a lot from the crash of the cod fishery, and there's a lot of monitoring systems. We do some testing both provincially and federally, and the fishers are a great resource. They can see the signs out there on the water if there's potential problems, and we haven't been seeing that. Now, whether we'll continue to see the escalation of catches that we have in the past, that remains to be seen, but it's been positive, and we want to keep it that way for many more years to come.
Now, a friend of mine, his parents are from Cape Breton, and I remember him telling me they would eat a lobster with just a knife and fork. They didn't even need any crackers or anything, nutcrackers or anything. So tell us, a real maritime Canadian, how do they eat lobster, Ian? Just remind us.
Well, it's kind of a PEI tradition here. We like our lobster cold. It's cooked, but it's cold, and great to crack the. There's a little trick to crack the tail with your hands and split it, and there's lots of things. So there's a lot of good meat there, and it's interesting. People love lobsters so much; they're very motivated to get every little bit. So that's what they work on, and you can learn pretty quickly if you're hungry enough. That's for sure.
I've been to a few lobster suppers on the island. I would have gone to them every night, but my wife said enough is enough. But thanks for joining us, Ian. That was great. Ian McPherson, Executive Director with the PEI Fishermen's Association, and he joined us from Charlottetown.
Well, folks, that's it for Money Talk. Thank you so much for joining us. Hope you've had a good weekend. We'll be back next Sunday at 2 p.m., and I wish you good fortune in your investing. I'm John Budden, and you are listening to 580